Hi everybody, it's Dee Reinhardt with Illinois WorkNet. Today we're going to be talking about the business guidelines to dealing with unemployment. And to help me with that topic, I have Carol Gabrielson. She is a specialist in controlling employers' unemployment costs with her own company, Unemployment Consultants, Inc. Carol's worked with a number of governors. She continues to work with the Illinois Department of Employment Security on rules and regulations. She's a published author. She speaks publicly at conferences for SHRM, Illinois State Chamber of Commerce, Management Association of Illinois, Employers Association of Illinois, and the Manufacturing Association of Illinois. So welcome, Carol, and thank you for joining us today.
Thank you for inviting us. We're looking forward to it.
Great. So why don't we just jump right in and get going with the presentation.
Great. Well, I'm here to educate you on the Illinois unemployment law as it stands, now in 2015. The first thing I thought we would go over is the maximum weekly benefit amount. In 2015, the maximum minimum weekly benefit amount is $51 per week. So if an individual works very, very part-time, and when they calculate the weekly benefit amount, it comes out to less than $51 a week, they would be financially ineligible. An individual who is single with no dependents or is married with a working spouse, their maximum would be $426 a week. An individual who is married with a non-working spouse, the maximum is $507 a week. If an individual has a dependent child or children, the maximum would be $580 a week. So when you look at that, there are 26 weeks of benefits payable over a one-year time frame. If you're a single individual, the maximum you would collect is $11,076. If you have a dependent child, that could go all the way up to $15,080. So as you can see, there's a large cost to this. And of course, all these charges go against the employer's account, and they do affect your tax rate. The 2015 tax rate, the maximum issued is 8.150. The minimum is 0.550, and you pay your tax on the first $12,960. So the cost per employee on a tax rate is $1,056.24 if you're at the maximum. If you're at the minimum rate, it's $71.28. So as you can see, there's over $984 difference in savings per employee for 2015 between the minimum and the maximum rate. It is important that employers control these costs. This is the only tax the employer has an input on. It is strictly based on claims paid out against your account versus the payroll that you have for your employees. So it is something that can be controlled. The 2016 contribution rate notices will be issued on December 1st of 2015. And you will have 15 days from the date of mailing to protest if you disagree with the rate assigned. And I have to tell you, every year we do find errors in tax rates. So it is imperative that you do go through and you pull out your Ben 118s for all the quarters listed on the tax rate contribution rate determination. If you've been in business for 5 years or longer, that'll be a 3-year time period. You need to go to the Ben 118 benefit charge statements and see, did I protest them? If I protested them, did I get a response? If I got a response, did it result in a credit? If you have outstanding protests or hearings or decisions on a Ben 118, you need to protest those quarters on the tax rate, and you'll need to attach all the documentation that you sent in on the Ben 118 protest. If you have credits that are to be issued, it's important that you go back to each of those quarters and make sure those credits were in fact issued. Should you find an error, you need to protest that quarter on the tax rate notice as well, and provide any documentation on the credit. Once you have verified all that and realized your tax rate was okay, the tax rate is then just a mathematical calculation. You verify the taxable wage figures, and then you take those figures and you multiply them by benefit charges and the benefit conversion factor of 138.4. Divide the revised benefit charges by the taxable wage benefit wage ratio, and then you take that and multiply that by the state experience factor. So each of those factors increases your rate. The 2015 benefit conversion factor was 125, and the fund building tax was 0.550. The 2016 factors will not be issued until sometime in late October, early November of this year. If you are a government entity, a nonprofit organization, or an educational institution, you have an option to be a reimbursing employer or pay a tax like all taxing employers pay and regular employers. The employer can pay a tax or elect to out of that and reimburse the state, and then you pay the state dollar for the benefits that are paid out. Most of the time, it's cheaper to be a reimbursable employer than a taxing entity if you control your unemployment costs. If you're going to change your method of payment, it must be changed in December by December 31st of 2015. The change will be there for 2 years. In order to get the change done, a letter must be mailed to the Illinois Department of Employment Security requesting a change in payment status. The state will then send you the forms to complete and make the change effective January 1st. Claims as they come in, it's important to understand the state has different types of forms and they mean different things. The first notice is the notice to chargeable employer. That means if benefits are paid on that individual, your company is going to be chargeable on that claim, and those charges will be applied to your account, and your tax rate will be increased based on those charges. Or you could get a notice of interested claim or not chargeable. Now, IDS, if you get your claims via the internet, via the SIDES program, it'll call it an interested party claim. If you are getting your claims via the mail, it's called a not chargeable party claim. They're the same form. However, you need to be aware that if they change the chargeability, you only get one chance to protest this claim. The one good thing about getting these base period not chargeable and interested party claims is employers are now aware when they have a current part-time employee who is filing against a full-time employer. And later on under chargeability, you'll see why that's important. The employee, when they stop working for an employer, can file for unemployment benefits. 90% of the claims are filed online. The claimant completes a form giving the reason for separation, last day worked, last 30-day employer, and all employment history. Based on that, the Illinois Department of Employment Security has to determine if it's a chargeable claim or an interested party claim, and they mail that out to you. If the Illinois Department of Employment Security changes the chargeability status on an interested party claim, the employer does not get a second chance to protest the separation issue. We find in our office about 10% of the interested party claims are changed to a chargeable status. And so it is imperative that you protest both claims, any claim that you get in, within the due date. If you have a chargeable claim, you want to protest all issues possible, such as a quit, a discharge, refusal of work, availability, pay issues, and chargeability issues. And you also want to attach all the documents relating to that issue. Some of the documentation you want to attach, when someone's discharged, you want the letter of termination, The details of the final incident, if not spelled out in the letter of termination, should be spelled out on your protest. Prior warnings for the past 6 months, copy of the policy that they violated, the employee's signature for the policies, all reports and documents regarding the final incident that caused their termination. When somebody resigns, you want to attach the letter of resignation. Employees have been known to change their reason of resigning from the time they tell you that they're resigning till the time they go to the unemployment board. The only way you can truly establish what they told you is to get it in writing from them. If they don't give it to you in writing, you should document it in writing and send it to them certified. Refusal of work, you'll need the date the work is offered, the date the work is to begin, job title, duties, rate of pay, location, hours of the job, and reason for the refusal. This is used very often when somebody has been put on layoff and now you're calling them back to work, and either you can't get a hold of them or you get a hold of them and they say they're not available for work. If they have an unemployment claim going, you should definitely notify the Illinois Department of Employment Security within 7 days of that refusal of work. When you're getting the not chargeable or the interested claim, this claim is sent out to all employers all the way back to the beginning of the base period. Now, you need to protect your rights because you never know if the claim is going to change from not chargeable to chargeable. So you do need to protest the separation issue. You do not need to send all the documentation. If the employer becomes chargeable down the road, you can pull the documents and mail them at that time. But if you don't protest the first claim, you will not have party status later on, and the state doesn't even have to consider your additional information. Now, the state, when they mail the claim, has to determine if you're chargeable or not chargeable. There are 3 ways they go through and determine this. The first and most common way is a 30 working day test. The second is the requalifying employer test, and the third is how part-time employers can be charged when somebody's still working for them. The 30-day test is the most popular and is used about 75% of the time. This individual must have worked at least 30 working days, not calendar days, working days, from the date of the claim back to the beginning of the base period. The 30-day test must be used on all new claims. And the 30 days need not be consecutive. So if you hired somebody in January of 2015 to work 20 days, and they come back and they're working for you in July, this is their 21st day of employment because it's within the base period time frame. The base period is the first 4 calendar quarters of the last 5 completed calendar quarters. So the base period will change quarterly. So for July and until September, the base period is from April 1st of 2014 through March of 2015. And it'll remain that way till September 30th. Then in October, it will go from July of last year to June of this year. Now, if somebody doesn't have enough wages in a base period to qualify for benefits, the state will look to see if including the most recent 4 quarters, the quarter ending in this case June 30th, if they have enough wages in that quarter, they can do what they call the movable base period. It doesn't occur very often, but that is a possibility. The second way you're charged is becoming a requalifying employer. That means the individual had worked for Company A, quit or got fired or refused work from Company A, filed for unemployment against Company A, was denied benefits against Company A. Now they came to work for you, and they've worked for you 4 weeks, and you decide either the job is completed or they're just not suited for that position, so you get rid of them. And suddenly your claim comes out saying you are chargeable. And you are chargeable because the individual had earned his or her weekly benefit amount in each of 4 calendar weeks after disqualification was imposed. You have singly requalified them, so you are chargeable. This claim has to be an additional claim. When you get the claim form into your office, if it's a new claim, they have to use the 30-day test. They cannot use the requalifying test. The requalifying employer gets charged about 25% of the time. So it's a pretty high rate. So you need to be aware. This is another way where the claim will come out saying you're not chargeable initially because they didn't work for you 30 days. Then as they review it, they realize, oh, you requalified the claimant, so they'll change your chargeability status from not chargeable to chargeable, and if you didn't protest the claim, you're out of luck. So it's imperative that you do take those actions. Now, the one nice thing about getting these not chargeable claims is the employers who have part-time staff now know somebody is filing for unemployment. And the reason you need to know that is because there are certain ways you could become chargeable on that claim. So the full-time employer is chargeable until the claimant earns over his or her weekly benefit amount in 1 week. So once you get this claim in and they're working for you 10 hours a week, you don't want to increase their hours. Because if you increase them even to 12 hours or 15 hours, that could put them over their weekly benefit amount. Okay? If it puts them over their weekly benefit amount, their claim stops. And then when you reduce their hours down, they then have to look for who's most recent. So the employer can be charged if you are the part-time employer, if the employee has worked for you 30 days, if the employee has lost his or her full-time job, if the part-time employer increases hours for 1 week, the claim is stopped, and then what happens next week when the hours go back down to 10 hours and the claimant reports that to the state, they have to reopen their claim. When they file a reopened claim, the Illinois Department of Employment Security will look for the most recent 30-day employer who reduced the wages. That would be the part-time employer, and now you're stuck paying the unemployment while they are working for you part-time. And it does happen, so beware of that, especially if you're part-time. The bottom line on chargeable employer, we want you to realize you should evaluate all your new hires by the end of the first 3 weeks. Because if they work for you 3 weeks or less, and a week starts on Sunday, ends on Saturday, there's no way you can be charged. If they work into that 4th week, there's a 25% chance you can be charged. And then the other thing is do not increase part-time working hours once you become aware the claimant has filed for unemployment benefits, because that could increase your charges as well. You need to understand that a disqualification for a discharge for misconduct, a voluntary quit, a refusal to work results in the claimant being denied benefits, and they're denied till they return to work and earn his or her weekly benefit amount in each of 4 calendar weeks. And that's the one you don't want to be, or you're the requalifying employer. When somebody has chosen to resign, it's imperative that you try to get that voluntary resignation form in writing so that nothing can be changed. The form should be completed at the time they verbally resign so they can't change their reason or change their mind. A document needs to be prepared and sent to the employee if the employee does not submit a written resignation. If the voluntary quit is attributable to the employer, unemployment benefits will be paid. If the voluntary quit is not attributable to the employer, benefits will be denied. So somebody who quits to relocate, take care of their child, lost their transportation, lost their daycare, wants to go to school, wants more money, those are all not attributable to the employer, and thereby they would be denied benefits. If an individual quits per medical advice and a medical statement is given to the employer, benefits can be paid once that medical situation is resolved and the employer is not going to be chargeable. This is called a pooled cost, and although they're collecting, the employer will not be charged. This can occur if somebody is caring for their children, if it's their illness, caring for a spouse, adopting a child, any type of a medical situation. This can assist the employer in. The one problem with this pooled cost provision is often you're charged for those claims, and that comes back to those Ben 118s when they come out each calendar quarter. It's important you go through that, and if somebody did quit on medical advice and you weren't supposed to be charged and their charges appear on your statement, you need to protest it and get those off. This is one area that the state's kind of weak in getting those charges removed. If you're going to discharge an employee, you want to discharge them for misconduct. That is a term the state uses to determine if they're going to deny benefits. If you're discharged for misconduct, benefits are denied. If you are discharged not for misconduct, benefits are allowed. Now, in order to establish misconduct, you have to have a final incident. And that final incident has to be a deliberate and willful violation of a known policy. Warning, suspension, and termination must take place immediately after the incident. Now, to act immediately, we never ever suggest you fire on the spot. We suggest you suspend the employee pending an investigation. All suspensions must be in writing. They must have beginning and ending dates. Suspensions are usually 2 to 3 working days, no more than 7. The reason you want to start out with 2 or 3 days is when you suspend them, you're going to conduct an investigation. During that investigation, you may get some additional information. When they come back after 3 days, you want to question them on this information you have found. They may give you additional information. You may need to resuspend them for another day or 2 while you finish the investigation. But all that has to be completed by 7 days so that they are back at work. When you are preparing your documentation, it's imperative that you list the date and time of the violation. You get any witnesses' statements. You state facts about the violation. You don't want to bring in general issues or personal comments or additional issues. You want to focus on the incident at hand. You want to ask the employee, why did they do that, and document their answer. And because the employees won't always write anything. For the warning to be used, the employee must have seen the warning. They don't have to agree with it. Give the employee an opportunity to read, sign, and make comments on the document. If the employee refuses to read or sign or make comments, have a witness sign the form that the employee had refused that. You should never write in the employee comment section that is strictly for the employee to write in. However, under your statement of facts, you should include, when asked, the employee verbally stated, and if you can, list the quotes of what they stated. That would be the best way to handle it. I would like to thank you for listening to our webinar today and participating. I hope everybody learned something from this. We are experts in unemployment. We would love to work with you. If you have any questions, feel free to contact us. So at this time, if there's any questions, Dee, I'm happy to take them. Dee?
Thank you very much, Carol, for joining us today, for your
my heart
sharing your
stopped.
time.
I thought we lost it.
Oh,
I'm sorry.
We really appreciate your time and your expertise, and right there on the screen we have a link for the unemploymentconsultantsinc.com. Go there if you have any questions for business unemployment, how to deal with it. They are happy to help you, and they will be happy to help you learn how to better control your costs when it comes to paying the unemployment taxes. Thank you so much, Carol, for joining us. We appreciate it.
Thank you for having me. I enjoyed doing it.